Good morning, everyone. I'm Pete Gillingwater, CEO of Newfound, and welcome to the day one of the market missions in the UK. I can report it's going to be a very hot day in London. It's sunny and 30 degrees, and that's another good reason why you should be here. Although I can't promise the weather will last as long as the next couple of days. So welcome to today's program, and I'm also joined by Yessi Bello-Perez, who's a respected fintech journalist, and she will be moderating the first session and having a little chat with me over the next 20 minutes or so. And just a little bit of information for yourselves. I'm sure that you've seen the onboarding video, etc. But of course, this program is going to run for the next couple of weeks. And of course, we're aiming to have an outstanding sort of number of sessions so that you can gain some great insights in terms of the UK fintech marketplace. And one new addition to today's program, which you may have seen, is that we're going to have an icebreaker session after the second session, where you'll be able to meet the Newfound team and also your fellow cohort members as well. So good morning, Yessi. How are you today?
I'm very well, thank you, Pete. How are you?
I'm enjoying a Monday morning start, thank you.
Good, good. Now, I'm very glad to be joining you as your moderator today. And to kick things off, I know that Newfound has assembled 17 sessions between now and next Thursday, featuring no less than 48 expert speakers, which I know it's pretty impressive. So tell us, how many companies do we have on the cohort and where are they from?
Well, there's 30 companies. They're from 9 different countries, and there's a good bunch of them from Australia and New Zealand, but we've got some good European presence and also companies from India and Hong Kong as well. So truly international, and it's great to have them all join us today.
Okay, and why has Newfound created the Market Mission Program?
Well, I guess, we as a firm specialize in supporting technology companies to go global anyway. And in my mind, this is the beginning of the journey, the trade mission. And of course, when COVID came into our lives back in sort of February, March of this year, it became obvious that, trade missions and business travel was going to be, somewhat suspended. And it's proven to be the case. And in fact, I was about to go on a trade mission with London and Partners to Dubai, Sydney and Melbourne in March, and that was cancelled literally with a few days to go. And so it gave us the opportunity to create a program we feel is not necessarily going to replace the physical trip, but to actually enhance it and to be a slingshot into that market visit. So we've worked very hard over the last 6 months putting together obviously what we think is a very, very appropriate program in a virtual trade mission perspective, but also to be able to curate and pull together 48 experts from the UK marketplace. And also just to point out, as we speak today, in fact, this time last week, we kicked off the Australian FinTech program, where once again, there is 17 sessions, 48 in-market experts. So in fact, there's 2 sessions running concurrently at the same time. And also we have a third session that we're running this week with the government of Western Australia, and that's supporting 10 technology companies coming into the UK as well. So we're quite busy at the moment, and it's been a lot of fun.
I was going to say, you've had a busy year so far.
Absolutely.
Okay.
A little holiday maybe, but no, it's been very good.
We often hear the term, the UK is a global fintech hub. So I want to get a better sense from you in terms of why you think fintech businesses should look to break into the UK market to begin with.
Yeah, I mean, I think it's an obvious answer when you live here, and I think yes, you probably know the answer more than most as well. First of all, the UK, and particularly London, essentially has a core sort of financial sort of services sector that's unparalleled in the world. I guess New York is probably as big, but obviously the UK is very much one of the sort of founding centers around finance and insurance and the regulatory environments. So firstly, we've got scale here, and of course and what I can say, you can literally walk from banks to lawyers to accountants to VCs to fintechs within about 20 minutes. So everything's here. Mm-hmm. Also the scale, the size of the marketplace, obviously it's quite significant marketplace, sort of number 5 economy in the world, 65 million people on the doorsteps of Europe. Appreciate, obviously, we're not in the EU anymore, but that's another question that will be answered over the next couple of weeks in terms of how Brexit's affected things. But also, we have the skills here, I suppose my origins as a headhunter, I just know that the people side in London is essentially, its main asset, and it's a global community here. And, you'll meet 10 nationalities a day because of just the way that people come to London and use it as their home base. But certainly as a fintech ecosystem, it's almost unparalleled.
Cool. And look, you said from Newfound's perspective how the last 6 months have been incredibly challenging, and there's no denying that that's been the case for businesses in every sector. But what does it actually mean for fintechs looking to break into the UK?
Well, I think the opportunity remains here. Of course, the way to do business has changed over the last 6 months, and this is, I suppose, what we're trying and support here in terms of helping companies, pull together plans and to be able to still maintain growth plans into the UK and beyond. But they just have to think about things a bit differently, and they have to obviously access the marketplace in a way which perhaps is less physical, more virtual, and there's no reason why they can't set up operations over here, even if they can't fly. There's still ways of doing business here. And in fact, we are seeing examples of joint ventures and other types of interactions where companies can actually get traction. They can get, I suppose, new business opportunities. They can get partnerships, etc., without being able to physically be here. But listen, the flights will return. You'll be able to come here. And in fact, obviously, if you're coming in from parts of Europe, you can jump on a plane tomorrow or even this afternoon. But of course, if you're from Australia or New Zealand, it's a little bit more challenging.
Sure, but I think, like you said, I think it's still important to note that even the times are challenging, there's always an opportunity for a business to thrive and flourish, right? Even in times of crisis. And we saw that 13 years ago during the 2007-2008 financial crisis. Okay, so to give people more of a flavor in terms of what they can expect from the program, can you tell us about a particular company that Newfound has supported?
Well, there's a number of companies that we're proud to have worked with, and I guess it's really looking at the type of interaction we've had. So from a entry into the UK, a couple that spring to mind. There's a recently listed on the ASX company called Layby. And they've now sort of had their IPO just in the last week or so. We helped them come into the UK. We found their first leadership team. We helped them setting up the ecosystem. And that was about 18 months ago. And they've done incredibly well sort of building out their business and giving sort of cheaper access to finance for consumers so they can buy those things that they need tomorrow as opposed to have to save for them. We've recently worked with a Canadian wealth management company called PureFacts. We've helped them validate the marketplace. I mean, they were keen to come, but they didn't really have the insights to the competitors, didn't have the understanding of the size of the marketplace, didn't understand the regulatory environment. And over a period of 2 months, we built out a customized report and a presentation, which I gave to their board, sort of validating why they should be here. And in fact, they've recently invested a significant amount in terms of that growth plans into the UK. I suppose my favorite one is actually full admission here. I'm an investor, but it's a company I met from New Zealand called Cohort, which is connecting consumers to ethical businesses. Cool. They've just done a major deal with an Australian bank called Westpac, and they're about to announce a major deal with a UK bank as well. So basically connecting your spend with things like carbon footprint and, I suppose, once again, deciding on where you spend your money. In the time that I've known Cohort, we've helped them raise millions of pounds. We've helped them access the marketplace. We've helped them sort of set up a successful team here. And it went so well, they actually asked me to join their advisory board, which has been a fabulous journey. We've had some really good connections with companies coming into the UK.
Fantastic, and I will definitely keep my eyes peeled for that announcement as well. So I think, the terms going international or expanding overseas, we hear them all the time. And I think sometimes founders or entrepreneurs can actually underestimate the challenge that it takes to break into a new market. But you know better than anybody that that's so important. So what happens when companies don't prepare?
Yes, well, they normally fail, actually. Well, maybe not as a whole business, but what I have seen, and I've been working in the tech space for, many years, let's say more than 25 years. And I've seen a lot of companies attempt to set up here in the UK, and this is not just a UK thing, this is a global thing. And number one thing is that companies, they really don't realize the differences between a new marketplace to their home marketplace. And often they fail to address some basic fundamentals, around how stuff is sold, for example, and they assume it's done the same way or very similar to a home marketplace. So quite often they either send someone from the HQ or they hire someone through the network locally, but they haven't really validated the marketplace. So I think the biggest issue for companies is they don't prepare enough. They don't actually have enough insights. They don't necessarily spend enough time in terms of the detail. Some do, and they tend to be successful, but the majority, because it's inexperienced, because perhaps the team hasn't sort of done this kind of stuff before, they can often end up learning the hard way. And I've got some stories, I won't share names, but one US vendor that's had 4 attempts to set up in the UK. It's cost them, I would say, in excess of $10 million. They seem to have finally got it right the 4th time round, but it's fair to say, and they were a client, they just didn't quite listen to the advice, and that's the problem here. Advice, particularly from experts, is delivered so that you can learn and gain from other people's experience or other people's mistakes. It's good to learn off other people's mistakes. It's a lot cheaper, but too often companies, they try and do it themselves. And once again, looking at our cohort members from New Zealand and Australia, it's very easy to try and do it yourself, but I would advocate try and do it with people that can help you.
Yeah, for sure. Because even if you're coming from an English-speaking country, there's still a lot of things that you need to take into account, such as the business culture, the network, and it must be so hard to just land here and DIY it when you don't have those things in place. But going back to the program, what can people expect over the next fortnight?
Well, this is the key thing for the program. It's you will get a lot from the 17 sessions. There's a lot of experienced people on the panels, there's some masterclasses, some workshops, and you will gain a significant amount of information. And that's one of the key purposes of the mission. But the thing that you really have to tap into is accessing the speakers and the experts, connecting with them, speaking with them, and the platform's been set up so you can do that. The key thing is being able to take the information, but then also start developing relationships. I won't say that you'll get to know all 48 because that's probably impossible. But I was thinking about this. How long will it take to get 48 connections in the UK if you flew into Heathrow tomorrow? It'll take you 6 months. So we're giving this opportunity in less time than it takes to fly from Sydney, Auckland, Melbourne to London to actually meet 48 people. So it's great opportunity to build out your relationships, particularly when entering into a new marketplace.
Yeah, and it's not just quantity, is actually quality. I mean, they're getting unparalleled access to speakers that would actually probably be very hard to connect with in the real world, right? So I think that's definitely something that I will stress later on. Definitely make a point of trying to speak to the speakers as much as you can and make the most of this opportunity.
Well, that's right. I mean, there's a huge thank you to the panelists that are going to be with you over the next couple of weeks. And many of them are friends, and many we've known for a long time. But even us, we find it hard to get hold of them sometimes. So we're tremendously grateful that they're actually decided to be part of the program. And we're opening the door for you guys. So please step through.
Definitely. Okay. And what, apart from everything that you've just said, just to kind of start to wrap up our conversation, what do people get out of the mission from your perspective? What do you think is most valuable?
Well, it's these nuggets, and listen, we realize you're busy people, to attend every session is not going to be always easy. We're going to have obviously online recordings so you can access the information afterwards. You should definitely share it with your team. You should bring your team into some sessions that are appropriate, and we'll advise you around, a session that's ideal for your HR director or your CMO or your CTO, et cetera. But the key thing is to be able to listen and take on board those nuggets, because there may be just one thing you take away for the next 2 weeks that could save you a ton of pain or make you a ton of money. So that's why it's important to sort of really interact and get involved. That's probably the biggest piece of advice is there's just one thing that can make the difference from the next 2 weeks.
And I also want to take this opportunity, Pete, now that I have you, and I'm getting unprecedented access to you as well, just to pick your brain a little bit in terms of where you think the biggest challenges and opportunities in the UK fintech are at the moment, from your perspective.
Are companies coming in or in
Companies
general?
in general, but specifically for companies coming in.
The pandemic has changed business globally, and there's no doubt that it's not just a UK thing, but it's also whilst it's crushed certain industries. I'd hate to sort of be in the travel or hospitality or hotel sector, but fintech, apart from maybe a few sort of areas, is largely doing extremely well. And areas such as payments or KYC or I suppose credit checking, etc. There's a number of areas that are doing tremendously well because the banks have had to sort of change their models. Now, of course, the branches, certainly in the UK, are somewhat closed, and it's very hard to speak to a banker these days, or insurance, or it's just challenging. In fact, I've got a little article beside me around TSB chief admits frustration over customer service. So customer service is a big issue. So there's tons of opportunities, but you have to sort of do your homework and figure out how to get into that particular area. Too busy and it's already done, so probably not worth coming. But if it's there and the opportunity is significant, you've got to be here.
And also adapt really to what the consumer want, right? Try and step in where in the market, like finding your niche. I guess this applies to every subsector, but really giving consumers something that doesn't exist and that goes with the times. I think that's also very important for people to keep in mind.
Yeah, I mean, the UK is one of the most digitally engaged populations, and there's no question that everyone would like to have better services, and there's no doubt that the UK population are keen to sort of have much more interaction with I suppose financial services if it's done well. So there's tons of opportunity, but once again, it depends upon what you do.
Now, Pete, I would happily stay here and chat to you about fintech for years on end, but I do know that there's a schedule and we're slightly pressed for time. So just before we move on, is there anything else that you'd like to add?
Sure. Firstly, a big thank you. Firstly, to the 30 companies that are taking part in UK Market Mission 1. So you're our guinea pigs in the nicest possible way. Yeah, we want your feedback. We want to be able to get further insights about how the program's landing with you. This is our first, so we really appreciate your time and effort, but of course, we'd love to get your feedback as well, and we'll be in touch about that over coming weeks. Also, thanks to the panelists. I've already mentioned that before. Our partners. I mean, you've got to partner with stuff like this, and we've been tremendously lucky about who we're partnering with. And essentially, the Newfound team. They've worked very, very hard. We've worked weekends, we've worked nights, we've worked very early starts. And you'll get to meet them later on today. But that's the key thing for me is the Newfound team. And good luck with the sessions. And of course, I will be around being your MC during the next couple of weeks, so you'll get to know me as well.
Fantastic. Thank you very, very much, Pete.
Thanks, Jesse. Good luck.
Okay, so now, before our first panel, I really do want to explain to you how our 32 companies can communicate with our speakers. And as I said earlier, we strongly urge you to make the most out of this unique opportunity to access some of the finest minds in UK fintech. It's a live event, so in the same way that you would scrummage to the front of the stage if you were in a panel discussion or in a real life event, I really recommend that you do the same. And to do so, what you need to remember, excuse me, during each 45-minute panel, you can use the chat function on Zoom to post your questions. So please, if you have anything you'd like to ask our speakers, feel free to pop them on there. And particularly for the next session that we have coming up, I will definitely be keeping an eye on there for any questions coming in from the audience. So don't be shy. Then at the end of the session, we move into our Meet the Speakers session, where each of them will be waiting in a virtual booth for you to join. To access that, you can do so via a link on the Tame platform that you're all already signed into. And you need to simply click on the speaker you want to speak to, and you will then gain access. So for our first panel discussion, we're asking, what does the UK fintech market look like in the COVID era? And we're delighted to welcome 3 speakers to the mission to share their expert perspective on the UK fintech market, also touching on the challenges and opportunities. So to do so, please welcome our online panel, which consists of Anton Rudenkor, who is the Head of Digital and Innovation at KPMG, Martin Holman, who is a partner at Augmentum Fintech, and Louise Smith, Chief Digital Officer at Lloyds. Hello, everybody. I don't know if we have everyone with us at the moment. I can see Martin.
Hello.
Hi, how are you?
I'm good, thanks.
Just whilst we wait for Louise and Anton, perhaps you'd like to give people a little bit of a flavour of what you do at Augmentum Fintech.
Yeah, sure. So Augmentum Fintech, we're a listed, well, slightly unusual, and we have a listed permanent capital structure. So we are a venture capital investment fund, but our fund is listed on the main market of the LSE, which means that our capital is permanently in the fund. Our investors receive their returns by buying and selling shares on the secondary market, which means that the way in which we invest is probably slightly different to a normal GP LP fund, in that we're not limited by any particular time frame, so we can do short-term and long-term investments as well. We're typically investing at kind of late Series A, early Series B. We invest right across European fintech, across all of the subsectors, and we currently have about 18 companies in our portfolio.
Fantastic. And I can see Anton and Louise are here, my mistake. You were definitely not late, they were on time. So please, would you mind also telling everyone watching from home what you do at your respective places? So Anton, would you like to go first?
Yeah, sure. Hi, good morning, everyone. My name is Anton Rudenkor. I'm a partner at KPMG here in London. I lead our fintech practice both in the UK and globally, and also lead our digital and innovation work with our clients. So this is really around the same stuff, helping innovate legacy firms and getting them into the digital age.
Fantastic. And Louise?
Well, good morning. So Louise Smith, I'm the Chief Digital Officer for Lloyds of London. So very much in the insurance and insurtech space actually at the moment. So which is obviously a growing area, which I'm sure we'll get into. I'm looking at how we drive the digital transformation inside Lloyds, which we've been pretty public about. It's rare an organisation is so open about its digital strategy, which is called Blueprint, and also a digital transformation program, which is called The Future at Lloyds. Yeah, working pretty hard on that, which COVID has just accelerated.
I bet. Well, thank you very much to all of you for joining, so especially so early on a Monday morning. I'm really excited to get your perspectives on the UK fintech industry, and I want you to know that, open-ended questions, so unless I direct them specifically at one of you, feel free to chime in. Don't fight over answering the questions, but feel free to chime in if and when you see fit. And to kick things off, I wanted to ask you something that you've already touched on, Louise, and it's, what are the major changes that we're seeing in the industry as a result of the COVID pandemic? So perhaps you would like to take this first one.
Sure, we're all being polite, aren't we, for a Monday morning? So I think, let me give two perspectives. So I also work for the Treasury as one of their fintech envoys, as Anton knows, and I've done a lot of work, particularly within the region, the Scotland region, around actually when fintech wasn't a thing. Okay. So I probably also was part of digital when digital wasn't a thing. I think Mr. Blobby was in the charts when I first delivered internet banking, which most people now have to Google, which is a bit of a worry. I think there's a couple of things from my perspective around COVID. I think nobody would want this intervention. It's pretty horrific. But I think from an industry where I work now, from insurance, I mean, I'm a retail banker. I've worked in Barclays and NatWest RBS. But I think for the insurance industry, what we're now seeing is a huge acceleration around how do we speed up particular areas, like how do I place risk, how do I get transparency through that process, and how do I get speed when I need to recover from loss, so through claims. Okay. We're certainly looking at, as part of our strategies, how do we use the startup community or the smaller players to help us drive that. We've been quite public in doing that as well. We've got a number of labs, some of them innovation, but a lot of them focused around product delivery. And I think that's important, certainly from my experience. Innovation labs are good, but they need to have real traction and fast. I'm a big fan of getting into small tests and quickly against key pain points so that you can move faster. And Charlotte Cresswell always said something that sticks with me. I think a quick yes or no is much better than a slow, long maybe for the startup community. So we have an approach where we're research driven. We look at the startup community to get to the addressing of those pain points, and then yes, no, rather than this long, slow process. But what I'm seeing is a much stronger appetite, a much stronger pull. But in the last sort of financial crisis, I think we saw a big rise of the retail challengers. My bet on this one, and I'm sure Anton will get into it more than me, is I think we're going to see a much bigger drive in insurance, asset management, and around digital identity, but connected to data.
Okay.
So those are the big ones that I'm starting to see.
Cool. And Anton, do you agree?
Yeah, absolutely. I think that final point that Louise made around digital identity is a good one. It's a really hot topic right now over here. And the governments have several attempts at it and failed, but they're back in it again. The industries are definitely marching around this. So the banking and payments industry is represented by UK Finance. They're kind of the collective. They've got a kind of a project on that. The regulators also have something similar, and the ICO, the Information Commissioner's Office, have got it in their site. So I do think at long last we're going to get something coming off the back of that, not just for consumers but also for companies. We're relatively small. We've only got less than 6 million companies in the UK. I mean, that's a lot, right? But we're an island. You can actually give identities to all of those, and if you could, it's really going to help accelerate digital and the provision of services. A couple other topics I think that are kind of relevant to focus on post-COVID. So obviously we're all kind of quite wise now. We can use panes of glass like we are right now to communicate, but the channels are going to change, and they are changing for the way that consumers or corporates use financial services. Obviously we're already eliminating branches at a great rate. So about a third of branches have disappeared over the recent years.
Mm-hmm.
That will, I think, only accelerate. But there'll be a different sort of question asked about what physical presence should be for customers, which I think will be a positive one. So we'll see that change. Call centres, we love our call centres in the UK, but they're just not fit for purpose. They're not automated. So going to see that change a lot as well. And we can see investment plans going around that across the industries. And then the third one that's kind of interesting is the regulator over here, the FCA, have announced their new digital sandbox, which is basically forcing the large banks to innovate with fintech. The three initial use cases that I've chosen are SME lending, which obviously was a big one for us. Assessing and supporting vulnerable customers of different ways of thinking about vulnerability. So I think that's going to be a really, really hot topic as well as we can move forward. And then the final one outside of the FCA, I think is hot, is working capital management. Because not only we've got COVID to contend with, but we've got the politicians and Brexit, which is even more fun. And then we've got Donald Trump running around with China. So supply chains or anything like that are really stressed right now. And looking through at some of the people and organizations coming through on the trade mission, if you are focused on digital payments, working capital management, collecting money quicker, that is all good stuff for kind of a huge gap, a huge hole in our short-term working capital finance that we're going to go through over the next 3 years.
I think all of that makes sense. Martin, do you have anything you'd like to add?
No, I mean, I think I agree with lots of that. I mean, there's obvious, the two primary obvious impacts of this have been largely on travel and office-based accommodation. I mean, in travel, nobody's traveling for business anymore. People are doing these discussions through Zoom, and the lack of business travel, the lack of subsidy of the business travel is going to impact all the way across through all of the cabins. I think we're going to see major reorganization of airlines post-COVID. That's not fintech, of course. On the office side, I do have some kind of contrarian views on the office side. You'll notice I'm in an office. I mean, we've been back in our office for quite a long time. We've been able to do that as a small company. without lifts and without the problems of public transport. I do, people talking about the death of the office, I do believe is probably slightly too early, but I think we'll probably see a return to a 90% office, and as we know, with 90% economies, I think that's going to have a significant impact on commercial real estate, where there is a much more acceptance of remote working, albeit I think, the people that I think there'll be a sense of exclusion from those that are part of teams who aren't in an office environment when the rest of the team return to the office. So I think we're going to see some kind of bounce back in terms of office locations. I only have to look outside here at the office, and the activity in Old Street here is 10 times the activity of what it was two months ago. So I think we're starting to see some kind of return to that. I mean, in terms of our ways of working, investment practices have definitely changed in line with both of those features that I've talked about. We meet all of our companies over Zoom now. Certainly for the first calls, there's no need to buzz off to Berlin to go and see a company for the first time. It's equally adequate to do it over Zoom. There have been, digital data rooms for quite some periods of time now, so it's capable of doing due diligence from a distance. I mean, I think the interaction, certainly in my industry, between investee and invested company will change slightly along those axes as a lasting impact. But in the main sense, we're investing across the long cycle. We're investing across 5+ years of cycle, and from that perspective, both supply and demand of capital is still there and has still been strong all the way over this COVID period. People talk about $500 billion plus in global venture capital, dry powder being out there. No GPLP structure is going to reward any investor for not continuing to invest that capital. And indeed, the opportunities are there. The supply of innovators in disruptive periods where larger corporates have been shedding individuals, or jobs have been lost, brings a stat and actually creates new problems and creates new challenges that need to be addressed. The stock of innovators rises, so capital's there, innovators are there. My businesses, or at least the venture capital industry, and I'll deliver some stats probably later, has largely been unaffected to date as a consequence of the COVID crisis.
I mean, you've already kind of answered very much of this question, but I guess my next thing was actually going to be about access to finance. And me as a reporter, we've done a lot of report coverage whereby some of the research that we've covered actually looks at how investors are becoming more inward looking at what's going on in their own ecosystems and not necessarily looking to back companies based elsewhere. And whilst I've got you, Martin, but also I'd be keen to hear from Louise and Anton. So in your opinion, do you think the capital is still there, but is it equally as easy to access that capital, or do entrepreneurs and founders have to bear something else in mind during such challenging times?
No, I think what you mentioned there is definitely correct, and it definitely happened in the first half of the year. I mean, just put some numbers around that. European fintech for H1 of 2020 was pretty much flat on 2019 at about $3 billion, which was down in Q1, up in Q2. And if you looked at the sort of Q1 numbers for global, and people that have heard me talk have heard me spout these numbers before, but if you looked at global venture capital investment for the first quarter of the year, it was at about 82 billion, which was down slightly on 2019, largely driven by China, which was 30% down because obviously that entered the crisis earlier. But the impact was largely at early stage, so seed and Series A, which was 30% down year on year. So flat overall, but down at the early stages. And I think that reflects the patterns that you were saying there, that new companies on the scene in H1, those that weren't already invested or already in venture capital portfolios were struggling to find access to that capital as venture capital firms focused on their own portfolio. And focusing on their own portfolio to ensure liquidity for 12 to 18 months really kind of buoyed that investment activity, also supported by government programs like the Future Fund. So companies that would not necessarily have raised capital at that time went out and raised capital. which really kind of buoyed the investments to companies that already had the capital there. I think, you know, going forward, the argument is that now that drops off, and I would you know, for the reasons that I talked about in my previous answer, I don't think that's necessarily the case. I think the capital's there. I think the innovators are there. I think the problems are there, and they're more manifest. And I think, you know, in this environment of those trends to digitization that you know, Anton mentioned, and I think Louise touched on earlier on, are increasingly prevalent, and no doubt we'll talk about some of those features in this discussion as well. The problems are there to be addressed, and capital is there to be invested. It's kind of business as usual, if you like.
Okay, and Anton and Louise, are you finding the same kind of thing in the way that you work with and support startups?
Yeah, I think so. I mean, look, I'm a big fan of Augmentum. I think they're a great strategic investor and a very loud voice on behalf of fintech for the VC community. So I, you know, take heed from what Martin or others say from Augmentum. A couple of thoughts. I feel it's going to be a little tougher on the early stage and seed funding going forward. We're over-indexed on that anyway. We tend to produce lots and lots of fintech in the UK. We tend to not have many of the really super large scaled fintech come out through the UK. So the issue is kind of in the scaling patient capital end, I think. That'd be one observation. Secondly, looking at the trade mission that's on the line here, we've got lots of Series A, Series B bootstrapped organizations. So maybe they're not necessarily coming over for the funding anyway. But if they are coming over and they're wanting to get a Series A, B or C, obviously ring Martin for a start because he'll understand what they're doing. But you'll find a very vibrant community of VC firms over here who understand the sector or sectors to a level of depth that maybe you won't get in other markets. It's a very, very strong ecosystem. And I think the VCs that understand the sector will continue to support, as Martin has said. But that scaling capital one is the one that I'm very focused on at the moment with the UK government strategic review of fintech. So there'll be recommendations going through to Treasury. And, you know, trying to free up the institutional investor base to be able to get into the fintech class would be good. We have very few large technology firms left in the UK that tend to be picked off like Arm Holdings in the press today. You know, I'll pass over to Louise.
Yeah, it's difficult to add to that. I mean, I agree. I think it is early stage where the challenge is. I don't want to repeat what the guys have said, but I do wonder if there is as much understanding or as connectivity into the broader UK regions to that level, and is there opportunity there? And again, there's a review going on around that in terms of the network connectivities and can we do more? I think the other area is, and I'm sure we'll touch on this at some point, is around how do we get some of those real use cases out, because that drives momentum. And some of the use cases I'm seeing right now about partnering, particularly in collaboration, because the problem statements are still there, the pain points are still there, the customer need is still there. I've seen some great fintechs, insurtechs, regtechs, and anything else we want to add to the naming conventions, pivot their models in this environment, actually become a lot sharper on what it is that they do. And actually that's a good thing. But I still wonder, do we have enough pull from the larger institutions around how do we accelerate using some of the startup community? That for me is still, and always has been, a massive opportunity. We just don't talk about it enough. And some of our reference points are so old now. It's what can we do more? I share Anton's worry actually, which is quite rare. I'm agreeing with Anton today. So, but I think in terms of must be the remote work. I think the other
thing. Your Aussie accent, Louise.
I know. I think the other area that worries me is that startup side, but that big scaling point. As I say, we've had some success in Scotland. We've got some great businesses now that have gone on to AIM, etc. We've got some that are kind of like, you know, continuing to grow into Europe, others into Australia as well. But they're ones and twosies, and then they seem to hit a limit, and it's how do we help that early stage, and then how do we help that strong acceleration. I'm seeing some interesting patterns and use cases globally who are really pushing that. And I just wonder if there's something more we can do. As Anton said, though, there is a lot going on around the Treasury, the government at the moment about those reviews, which is much sharper and targeted. And I think if we can pick 1 or 2 big actions out of there rather than 10, I think we should be able to start to move. But it's going to take, I think it's going to take a lot of weight behind it collectively. But no, I'm seeing the same things.
If I could just comment on that from the private capital, from the private capital angle. I mean, I think that's right. I mean, I think the sort of scaling capital piece has often been the charge levied at UK and European venture capital. You know, I remember a stat from the Slush conference in Helsinki a couple of years ago, about 5 years ago, which the stat was about domestic funding for startups at the seed and Series A was 80% domestic, and domestic being European, so in-country funding for in-country startups. Whereas if you got to sort of Series C and the growth capital stages, it was 80% from the US. So I think there, you know, typically has been a big reliance on capital from US larger funds to drive larger scale growth investments at Series C, say, and beyond. But increasingly you're seeing consolidation at that later stage in Europe. So European venture capital has doubled in the last 5 years to over 30 billion in 2019. 20% of that came in rounds less than rounds greater than $10 million, which generally signifies a later stage round, versus only 10% 5 years ago. So we've seen a 4 times the volume of capital in rounds that are greater than 10 million. So that reflects, I suppose, an increasing appetite towards venture capital, but also the fact that there is a greater availability in Europe to fund those later stage deals.
Okay, so that's reassuring for sure for companies, especially looking to break into this market. I'm also going to just look at some of the questions that the audience are sending through. And there's one for the whole panel, but particularly for you, Louise. And someone's asking whether you think that the new normal and related changes in operations and customer needs will see changes to the PAS 201 2018 standards or guidelines.
I think somebody should just get an award for actually remembering that guideline, actually. So just so that everybody knows that guideline is in relation to how larger institutions and the fintechs can actually engage with each other without essentially each party sort of running out of energy in the process, I think is the best summary, or nobody killing each other in the process. So I think in terms of I hope so, but I do think that was, I think if I look at the intent around that, it was pretty significant at the time in terms of trying to do something with what was a real and perceived problem. Mm-hmm. So I think for me, I mean, my view on this is probably more of a personal one rather than necessarily a standard or a guideline. I think if we become research driven within organizations around what are the big issues that our customers, I mean, we're a market, and the users of that market, what are the things that affect them or impact them in trading through that market? And I think if you're research driven and get to those pain points pretty quickly, I think it's actually the right thing to do is to look to both the startup community as well as some of the bigger players around how do you solve them and at what speed can you solve them. But getting it off paper quickly is important. As I say, Charlotte said something to me which has stuck with me for the last couple of years, is around getting to that yes or no, rather than just keep moving through paperwork or not being sure or keeping people hanging on. Nobody's got time for that. So I'm hoping there is a bunch of leaders as well as guidelines who will start to naturally, every time they look at addressing journeys or product delivery or data, is start to look at these networks or these communities and go, how can these people accelerate? I've got to be honest, I mean, I've been doing this for a while. You'll know through RBS NatWest, we did some massive things with particularly in SME. And when that was a bigger problem, we even started to do some stuff in digital identity. We're certainly doing some stuff in my new role. I'm just not sure we talk about it enough. So there's always this fear. I think this is a leadership issue rather than a guideline one. So when I speak to some of my peers or colleagues in other institutions, it's that fear of, well, if I do that, what does it mean? Does it mean I don't have somebody to pull on? Does it mean I don't have that same, say or push, or what's actually happening? I think some of this isn't about tech or guidelines or whatever. It's actually about leadership, and I think we've got to look at how do we do more, but how do we make that more visible and transparent to people? But I'm hoping we don't fix this through guidelines, because I'm not sure that will have too much traction.
I think you're probably right. Anton or Martin, if you've got anything else to add to that.
I agree with Louise. The only thing I'd say is I went to a bank in New Zealand once called the Bank of New Zealand. It was a bank that used to be great, and it's kind of okay now. But they're probably the best at partnering of all firms that I've seen globally, in that their relationship managers for their fintech partners only get bonused if the fintech partners reach their objectives.
Okay.
Which is fundamentally different from most organisations here in the UK, which still have I think a vendor mindset or a parental mindset when it comes to fintech. So that's one thing to be very aware of when you come over here, is we've got large organisations that are not quite enlightened yet when it comes to building ecosystems, which they'll use the language right, but they won't act that way. So you just got to be a little bit concise with your time and your effort, not just with procurement and trying to get onto the platform or the panel, but actually how you then navigate the stakeholders within these large organisations, or even the mid-tier ones as well, because they just need a little bit of modernisation in the way they think around co-creation, joint working, collaboration.
I agree with that. I think Anton said something so important, which is around words and actions need to be aligned as well. And because you can be perceived, or you think you're doing something in this space, but I think we're behind. I think Anton's actually right in that viewpoint, actually.
Well, thank you both for your candor. I think from my perspective, a lot of the frustrations I've heard from startups in the past have actually been around how challenging and time consuming and costly co-innovation with a large corporate organization can be. So I'm hoping that, maybe it did take a global pandemic to kind of break down those barriers and to bring greater transparency, but everything happens for a reason, right?
I think just from my perspective there, just to add one comment on that, the big challenge for early stage startups when cooperating with large corporates is the level of distraction and the level of influence that a large corporate can have. So I often see chasing early stage startups chasing what are seen to be large, at the time relatively large rewards, which in fact in the long run of things are relatively slim rewards for almost complete diversion from the core. So building bespoke product for a client as opposed to building repeatably sellable productization as part of the strategy, and that tends to really derail startups at the early stage. So you just need to be careful that you are building elements of the product or elements of the offering which are repeatable and genuinely desirable across multiple clients, instead of just specifically for one.
Fair enough. And my next question is actually around what the market looks like for fintech solutions to legacy providers. So not entirely sure who is best placed to answer that one, so feel free to grab it, whoever wants to chime in.
Okay, I'll go first, because it's been a bulk of my time is with the legacy firms. Just a few things to recognise. Just to cap off on the last conversation, the London and Partners team here, which is the economic development agency for the Mayor of London, are organising a series of events called Getting Partner Ready. Mm-hmm. It's for fintech to go through the buying cycle, then go through actually how to get value out of a co-creation relationship and all that. So worth going through Newfound, just asking a bit more about that, as I know Newfound partner with London Partners already. I think it'll be good. Microsoft, KPMG, and Lloyd's Banking Group, as opposed to Lloyd's of London, which is Lloyd's Banking Group. We're going to support that one and maybe others as well. But just looking at the legacy firms, so just a few things that they're all focused on right now under this acceleration to digital banner. Firstly, they're all kind of quite happy with the fact that people got together very quickly, provided business continuity or services to customers. So there's a lot of kind of look back learnings culturally, governance-wise, risk management-wise. How did we get to where we got to, and kind of broke some rules, but we're still here. And I think that's a really good thing, because generally computer says no with policies and large organizations, and yet they've managed to do some things that are very customer-centric. What that means is they're all putting forward their budgets for next year right now. It's kind of planning season. And we will see a lot more doubling down on a lot of the things that they'd already started to tackle, whether it is acceleration to the cloud, because the cloud is certainly, I think, created a huge step change in the last few months in terms of services. The big cloud providers certainly think so and are spending all their time doing that. So that's one that's going to be important. You really have to be cloud native, I think, going forward. The second thing that's interesting is the Bank of England. We're going to do this anyway, but they're putting out a second paper on AI and machine learning. So any type of content related services, I think the banks will be given, particularly the banks, but the insurers and the asset managers will be given more confidence to experiment with AI and machine learning, obviously in an ethical, controlled way. But if the Bank of England, one of our key regulators, is engaging and taking it to the next level, you can bet that the industry is going to follow. So that'll be important. And then the third one is they're all trying to rethink their models at the moment for innovation. So do we put more money into a corporate venture fund? Do we actually start up venture building exercises? And there's 2 banks at the moment who are doing some sort of secret squirrel work around that right now. Should they start venture building a la Commonwealth Bank of Australia or Standard Chartered Ventures? So that would be a second area, I'd say. And then the third one is they're starting to think again around their partnership models and people who are accountable for that. I think there's a general sense in the community that the fintech partner people in banks in particular, we're really just on the commercial roadshow to visit all the big conferences and be on the panels. And there's a lot of truth to that. So I think they've got to get back to what they're supposed to be doing, which is actually inking up deals and digitizing their legacy business and operating models. One of the things I would say is front to back at the moment, all opportunities are there, whether it's digitizing risk and compliance and reg, or finance in its own right, or lending, as I mentioned, or then back into the front office products and services to customers. So that would be my bet. Final one before I go, and then I'll pass over to maybe Louise, is there's a whole world outside of financial services that are now fintech ready, in my opinion. Because when you think about it, money and credit risk or whatever it might be, underwriting is not just a financial services thing, it's for large corporates as well. Where I can see a huge opportunity moving forward is this idea of embedded finance, where fintech and banks and others help corporates actually create financial services or join up the financial services in their product and service. So I think if you're going towards Unilever, British Gas, McDonald's, those sorts of firms are going to be very, very interested in fintech if you've got capabilities that are relevant to them.
So basically, like, don't close yourself off to everybody else and don't just focus on the banks or the actual like mainstream financial institutions, right?
Well, if your business model allows you to do that, yeah, I think so. I actually think the platforms, as we call them, are going to grow much faster than the legacy financial services industries. Now, maybe Louise's job is to turn Lloyd's of London into a platform, which would be cool. But platforms are the way I think are the most interesting thing. And before the crisis, they were already accelerating at great pace. You can see a lot of the deals, Martin may want to speak about this, over the recent months have been platform deals around payments, credit cards, etc. Anyway, I'll stop for the time being.
No worries. Louise, what would you say to that?
Possibly say, Anton. I don't think it's rocket science, but I think in terms of, I think you're right. I mean, listen, there's a couple of things Anton said that I just want to underline. Firstly, I think I work, as I say, I'm a retail banker by trade. First time I've ever stepped into insurance, and I've realised in the last 6 months I work in the most coolest part of FS ever. we have drones and all sorts of stuff here, you know, and it's incredible what types of businesses form under this industry, and I'm still learning. I also think Lloyds is uniquely placed, as well as this industry, the insurance industry, when you think about the challenges that we have around climate, cyber, and pandemics, actually. You know, you forget that we're heavily, as you will have seen from some of the work that we did last week, you know, supporting how we solve for this pandemic, you know, and support those trials. So I think for me, we have to, you can't do that without looking to the kind of startup community for support. And that for me is what we'll continue to do. We've already started that through our labs, and I think you'll see that more as we move forward. There's a couple of things though that Anton said, and I think it's important. I think you will see a much I think this brings us into sharper focus on doing stuff. So I think you'll see less of the let's just turn up to everything, including the opening of a bag of crisps, and talk about it, but actually really, really focus on what is that partnership model? How do we actually track that to outcomes? What is it that we actually do with digital and data? And I think Anton touched on another one, as well as Martin, around the physical presence. Listen, we got to stop this swinging from left to right. We're all remote. No, we don't need the offices now. That's not true. It's nonsense. The same as it was nonsense that you don't need a high street presence for a branch or a type of branch. They just might not be what they are today. You still need a physical presence, but it's how do you take the best parts of physical environments, whether that's your outward customer face or whether that's your internal talent or skills or people, with the best of digital and the best of data, and create something far more powerful, not just replicate between the three of them. We have 3 floors of probably one of the most incredible things I've ever seen in my life, the underwriting rooms. And we are certainly looking at what is the future role of that room. But there will be a role, there'll be a very strong role, but it's how do we use data and digital to make something better? For me, I don't think we can do those things in the blueprint over the next 2 years without turning to this community. And we have to look at our technology, Anton's touched on too, cloud, AI. We also have to look at our model for how we partner, not just with startups, but more broadly. We have to think about what are those services we even need to own and which ones don't we? And I think it's all of that that's starting to come into sharper focus. Middle and back office still worries me, particularly in the retail side, because we spent a lot of times sort of trying to stay relevant in the front office. And I think some of that challenge around middle and back office is still there. So I think you'll see a lot of the incumbents, particularly on the retail banks, look at how do they address some of that over the next year. I think that's coming to sharper focus. But as I said, I think I've now working in the coolest part of FS, so we'll see what happens.
You've managed to sell insurance to me, to be honest. I'm in. I just wanted to get back to the audience because there's actually a lot of good questions coming through as well. And one of which is, what is the successful model that you have seen the RegTech adoption working for the financial firms working in the UK? And what are your thoughts on corporate ventures path? So and again, feel free to chime in.
I'll pick up on RegTech for a start. There's 2 firms that I really rate in our market. Martin may have some in his book as well that he wants to speak about, but I really like Quantizer and Onfido.
Oh yes.
Quantizer is a firm that is built on kind of a network analysis platform, so graph databases. And its route to success initially was getting some, I think, Series A funding from HSBC, and therefore HSBC feeling they needed to use them. But now they're in at least 4 banks here in the UK, I think Standard Chartered, RBS, Lloyds. And their secret is they pick on small use cases with a different type of technology that they can solve problems on. And they initially started off looking at the likes of KYC, AML, client due diligence. And now they've migrated across a whole series of risk sort of solutions and services, being very, very successful. But at the base of it, their tech is good and different. And the reason the banks like them is they manage to be able to free up the data out of these old legacy systems and present it somewhere else where that information can be reused. So their cloud relationships are really important to their success as well. It gives them scalability globally. And I think with Onfido, you know, similar sort of approach. They're a decent sized firm. You can trust them. You do due diligence on them as a procurement officer. You go, yeah, they're good to go with. But they know what they're doing. They're very precise with their proposition. There are too many RegTech firms here. I feel, back to Martin's comment before, they don't provide repeatable solutions for a client within their institution. They'll solve a problem, but you can't see them building out into a platform across the bank or the insurance company they work for. So that would be my key feedback. Different technology, very precise problem statement. If you can get someone to put some money into you so they feel like they have to use you, awesome. And then free up the data for reuse and joining up the institution internally. I think a lot of the heads of compliance or fin crime or whatever in particularly our large banks, have now really drunk the Kool-Aid on data led. They don't know how to do it, but they've drunk it at least. So that would be where I'd be heading.
Okay, great. And I would love to hear from all of you, but I do know that we are pressed for time. So before we move on to the Meet the Speaker section, I think it'd be really useful to everyone watching, for each of you to share your top business advice for fintech companies coming into the UK. So perhaps Martin, if you'd like to go first.
Yeah, I mean, I think for, you know, fintech companies that are approaching the UK from Australia or from wherever they're coming in, I think one of the important points is to have a UK based or focused fintech investor. You know, with we talked heavily at the start of this piece about the power of network and the importance of introductions. And the kind of opportunities that it brings. I mean, that's kind of difficult to have if you don't have on the ground sort of, or more difficult to achieve if you don't have on the ground representation in the market. Plus, then I think also it's incumbent on firms to recognise the kind of pluses and minuses of the UK market. I mean, sure, it's the epicenter of European fintech. More than 50% of European fintech investment is here in London. It gives access to network skills and capital that you need to expand, but as a consequence, it's highly competitive, and there are probably, you know, lots of businesses already trying to do the things that you want to do. So identify a good investor partner in the network. Recognize that you're going to have to compete hard, and identify that patient scaling capital that you're going to need, because, you know, one of the things that we haven't talked about, but, you know, is a trend. You're going to be private, probably private for longer in this environment. So identify that partner who can deliver that to you. Makes sense. And from you, Anton?
Yeah, well, first thing is, as I said earlier on, you've got to ring Martin or Tim at Augmentum, because they know what they're talking about, and they'll be good.
Sometimes.
There's a lot of free ecosystems out there, and we can get good advice. So the big tech firms, Amazon, Microsoft, Google, they all offer fintech or digital native ecosystems for them. So first thing is go and see them, it's free, and get plugged into their ecosystems, no matter which cloud, or even if you're not on a cloud, just do it. Innovate Finance over here is our trade association. So Charlotte Crosswell, that Louise has mentioned, CEO there, they're worth going and seeing, and trying to, even if you don't want to join them, try and get as much information out of them as possible before you move on. So free ecosystems, and there's a few others out there as well, London and Partners, Tech Nation. The second thing I'd say is you're more than welcome to come to KPMG, have a chat with us. We are reasonably friendly. And we are interested in firms that can digitize our own firm as well. I know it was one of the questions, but certainly all industries are becoming technology at the core. And then the third one, I think, is, you know, just really be clear as to where you want to position yourselves geographically within the UK. So London is, you know, we are the city, we are the investor base here. But as I think Louise has said a couple of times, and she is the ambassador for Scotland or whatever, there's two other places you can consider coming, which is, I think Manchester's got critical mass now. And then Scotland is definitely, and particularly Edinburgh, is number 2 after London. And we've all seen the results of COVID surveys. Most young people would rather work somewhere else these days and party in London. So that's, you know, maybe some considerations for location as well.
Yeah, for sure. And from you, Louise?
I'll do a build rather than a repeat. I think, as well as connecting to the ecosystems and definitely connecting to Martin, just to jump on that bandwagon, I think the other bit is around be sharp on focus. I know there's that temptation, I think Martin touched on it, to trying to be everything to everybody, or you end up being, you know, then creating something for a specific situation or an organization. Don't do that. I know the temptation's there, particularly in the early stages, because that kind of anxiety and panic. But I would get connected in. And when you get connected in, you'll find there's some really good people who will help you. You know, people on this call for a start, you know, they'll help you whether there's something in it or not, because they genuinely, passionately believe this is just the right thing to do. I've always said to people, reach out. I might not know what the answer is, but I might be able to connect you to somebody who does, and I'm always happy to do that. I know Anton's actually the same. We genuinely believe there's something here that we need to continue to push and drive, but be sharp on your focus on what it is that you're trying to solve for, what that business model looks like, because it's far more powerful and easier to navigate than it is if you're trying to be everything to everybody. That becomes quite tricky. So that would be the only build I'd add.
Cool. And after you've done all of that, if you want press, come to me. But honestly, thank you so much to each of you. I think you've each given everybody watching a lot of food for thought insights. And also thank you very much for your candor. I think it's very refreshing to hear what we're doing right, but also what else we need to do in order to help companies coming to the UK. I know there's some questions on the Q&A that are still unanswered. I'm sorry, but we've actually just run out of time. In fact, I've gone a little bit over. So with that in mind, please make sure that you do stay behind and connect to Martin, Anton and Louise. And to do so, you can again access the booth via a link on the Tame platform that you are already all signed into. Simply click on the speaker you want to speak to and you will get access and get to ask all your questions. That's the end of the panel, so that's all from me. Thank you very much to the three of you and to everybody else watching from home. I hope you find that useful, and I'm going to hand you over back to Pete.
Yes, thank you very much for that. It was a great panel. Could have kept on going, but no, it was well moderated, and thank you, Anton, Martin, and Lou. Of course, it wouldn't be a tech session without having a tech glitch. Apparently, the Tame platform is not working for some people. My colleague Harry McPhail has sent through an email to you all, and there's links to the various chat rooms with the three speakers. So please go ahead and meet the speakers. Really very useful thing to do. And once that session's over, we'll be kicking off with the public trust and financial services session led by Andrew Wild from Edelman, and that will be a very interesting session indeed. So I'll let you go and meet the speakers, and we'll catch up very soon. Thank you.